Canada has drawn up an initial list of $150 billion of U.S. manufactured items that it would hit with tariffs if President-elect Donald Trump decides to levy tariffs against Canadian goods. That's according to a person familiar with the matter. Our next guest, however, says Trump will have a tough time fully implementing his agenda, and he's got a lot more comments on various topics as well. John Zechner is here, chairman and founder of Zechner Associates. You're the co-host here for half an hour or so. You're a familiar face. How long have you been coming on here?
Oh, since the beginning. I think since 1999 or whenever the station opened. It's so like 25 years. But you and we haven't sat across from each other in over a decade now. So it's great to see you back.
Yeah, and, absolutely. I always enjoyed when you came in our conversation. So let's get into it here. Why don't we pick up on the whole Trump theme?
You know what? Yeah, this is different than 2017 when he came in. Yeah, this time again, he's inheriting a pretty good economy like he did when he took over the Obama economy. And it was sort of an easy game plan back then. Basically, he sort of stepped on the accelerator at that point and just juiced up the growth for the next couple of years. I mean, but it was a different situation. I mean, at that point, the deficit was a little over 3% of GDP. Now it's well over 6% of GDP. Inflation was running under 2% at the time. Now it's north of 3%, and sort of sticky at those levels. So stock valuations are at all-time highs. So it's a tougher road to come in. And the problem is last time he came in, he ran through the tax cuts. That juiced the economy to a higher level of growth. I think this time he's going to have a hard time. He won't get the tax cuts, I think, necessarily through Congress. It's going to be a tighter fight there.
Right.
I think when, the tariff talk, it's sort of talk at this point, what he actually comes to, I think he'll back off because in the end, he started off this sort of moving the economy, accelerating it from a lower base, and that worked through these tax cuts, the corporate, the personal tax cuts, and that worked well, the deregulation. But I don't see that you have the sort of the running room to do that again this time. You'll accelerate inflation more quickly. And you remember then, that came to a head quickly. I mean, 2017 was a great year for the stock market. 2018, there were a lot of problems because then the new Fed chair, Jerome Powell, who he appointed at the time, he started moving interest rates up, and they got into that big battle, and you had two big downturns. So I think we're at that stage. So I think in the end, Mark, what would happen is he promised everything, to get himself elected. And I guess he did politically the right thing. He said everything everybody wanted to hear to some degree, and whether you're you're rich or middle class, whatever, there was something in there. He got elected. Yeah. Now delivering that's going to be a much bigger issue, and if he can't, what happens? And I think there may be some disappointments in terms of how big the tax cuts actually are, how much stimulation. The DOGE, there's just not even room to knock $2 trillion off the spending.
Let's save your powder on that. You're going to talk more about that topic a little later on. Let's get to, you mentioned deregulation, the financials. We know the big banks are coming out with their earnings. Do you expect a lighter touch, and that could mean more M&A? It could be very beneficial for not just U.S. financials, maybe Canadian financials with operations down there too.
Well, yeah, the Canadian financials is a different story, Mark, from that point of view, because there's no consolidation really to take place here. I mean, there was one, piece of low-hanging fruit we thought left on out there in Laurentian Bank, and nobody stepped up, which tells you maybe something about what's really going on at Laurentian Bank. And obviously, RBC has done, that last acquisition of the old Continental Bank, HSBC, and that's coming in well. And then obviously what we're seeing with National Bank buying Canadian Western Bank, and that's it. U.S. You've got 4,000 banks there. I think there is a lot more room for consolidation. I think the winners will be the acquirers, the larger banks who bring in these assets and assimilate them. So, I think from that point of view, you will see, more deregulation. You've seen the deregulation. You'll see more M&A, and that's, good for growth from acquisitions going forward. The bank earnings in the U.S., they were impressive, but come on, you got to put things in perspective. You had a very strong economy, you had a positively sloped yield curve, which is always good for the banks, and you had raging capital markets. If they don't deliver good earnings in periods like that, when are they going to? I think the issue a little more is going forward, can they continue to deliver that? And up here, as well as in the U.S., bank valuations have migrated to the higher end, like most of the markets. So, good numbers, but I don't know that there's a ton of upside on that basis going forward from here.
Let's get to some of the areas you like: defensives, energy, industrials. consumer. Do you want to pick one of those? I know you're sniffing around BCE, parent of this network.
The defenses stick out to me. Mark, I see this as a little almost of a repeat of sort of the 2001 to 2008 period coming off the tech bubble in the late 1990s. And that's where Canada had underperformed for an entire decade, and they started to catch up because the world economy did better. And people look to more value-sensitive areas. So, yeah, we're looking at companies that have good earnings. They're not sensitive to the economy in terms of their earnings. They have lower valuations, high dividend yields, and sort of are unloved. Telecom is right at the top of that list. I mean, whether it's BCE, Rogers, TELUS, I mean, people are like these pariah moving away from these things. And I just think those are core businesses that will continue to generate. Yeah, you've got fourth player on wireless now. It's coming more competition. Yeah, you've got less immigration into Canada. I guess student immigration in particular is slowing demand a little bit there. But that aside, these are infrastructure assets, and for a growing area of the economy, trading at about 6 to 7 times operating cash flow with decent dividend yields and decent valuation. So yeah, that's one area.
And just quickly before a break, which of those do you own?
Actually, all three of them are decent size, yeah.
Okay, very good. John Zechner's going to stay with us. We're going to talk about other things such as the wealth effect on households and bank earnings and many other things. Stick around.